we need to like get comfortable with a small margin of failure.
We were going to close the next day in terms of actually getting the deal sealed the next day. He had to go home, talk to his wife. The next day I get a call. He said, I got another offer and it beat yours. Sorry. And I was like gut-ridden, right? But I think the mistake was assuming that it was mine. That's one mistake, and I think that like when that happened, I should have just really given it more thought. And I should have networked, and I was definitely lone wolf. I mean, I was lone wolf up until like maybe 2 years ago before I met you guys, right? It was like I'm signing my life away at $200,000. And it's like, wow, you crazy? Buddy selling $200,000 by signing his life away. Now it's $2 million, but you know that $2 million will make you $4 million in 10 years.
What is up, YouTube? Matt McKeever here again, and we're sitting down with Mike Van Houdt. In today's video, we're going to discuss the biggest mistakes Mike made as a real estate investor. Just a quick recap, if you guys don't remember Mike from the previous videos, he's actually done over 200 units in real estate. He's got $12 million of real estate right now that he controls, and he's absolutely crushing it, not just as a real estate investor, but also as an entrepreneur. So today, he's really going to break down for us his struggles and some of the biggest mistakes he made as a real estate investor. Let's get into it. What is up, YouTube? Matt McKeever here. We're back with Mike Van Houdt again, and in today's video we're going to talk about what's always a popular subject matter, and that's biggest mistakes as a real estate investor. So these are always going to vary depending on the person, their story, and their background, but I'd love to hear just from you, Mike, you know, what's some of the challenges that you came across as a real estate investor? What are some of the biggest mistakes? And we didn't really prep for this beforehand, so do you want me to buy you a little time? I can talk about one of my biggest mistakes as an investor.
Sure, yeah.
So one of my biggest mistakes, in my opinion, was I didn't talk to anyone else, so I was very focused on being that lone wolf. And the problem was, because I was focused on being the lone wolf, I didn't have a Roger Bannister. I didn't have someone that had broken the 4-minute mile. So like I constantly would come up against a problem and I'd assume that it must be impossible or next to impossible to solve, because I didn't have anyone in my network that I could lean upon that could be like, oh no man, I've actually been there, done that. You can have more than 5 mortgages. So that was one of the things that held me back in 2013 or 14, was I was only dealing with one of the major banks. I had 5 mortgages and they're like, hey man, you're like 28 years old, you can't do more. And I was like, I'm pretty sure there must be someone in the country that owns more, but like, because I didn't really have anyone to go talk to, I was like, well, like, what can I do? And they're like, well, I guess if you made double the salary, you could do it. So I literally quit my job, got a new job in a new industry so that I could make 6 figures and be able to qualify for one more mortgage. And that was still just a very short-term plan for me. So that was something that like, I think really slowed down my growth and trajectory as an investor.
So I think I'm good with. I think that's a good of a push me off the plane. I think I'm good to talk now. But I think I've made lots of mistakes.
Yeah, I think we all did.
Yeah, it's not like I try not to think about them like mistakes.
Sure.
I try to think of them like, what the hell was I thinking? You know, that's how I try to look at them. I think the most recent one was about 2 years ago. That was the biggest, most impactful one that I had. But basically, I was talking to this guy for about 5 years to buy his property. So like everybody else, door knocking, figuring out what buildings you want to buy, right, in your area. And so I went through that process. And about 5 years, so this is 2 years ago now, he came to me and he said, like, you know what? He called me one day and said, I'm looking to sell my properties. What do you want to pay for it? I said, okay, well, can we at least go through it? He was just like, he had issues in his life. He just wanted to dump it. And so I went there, and I went to see the property and stuff like that. Now, the market did change in the last 2 years, so it has really shot up. And it's hard to always, you know, nobody's a crystal ball. We don't know what the future's like, right? So we always try to be a little bit conservative because you don't want to overpay, because the environment at that stage wasn't an overpay stage, right? It was just like, property's worth lots of money, they're going to go up, but I didn't really see that because nobody knows what the future looks like. So basically, we agreed to a number, and I thought that number was fair. And we were going to close the next day in terms of actually getting the deal sealed the next day. He had to go home, talk to his wife. The next day I get a call. He said, I got another offer and it beat yours. Sorry. And I was like gut-ridden, right? And I'm like, this puts my little portfolio together in this little area. And that was, for me, was like, oh, you know. And it's probably, I don't know if I can find a mistake from that, but I think the mistake was assuming that it was mine. You know, as opposed to just just still making sure I'm on top of people enough that I build enough trust and relationship that it's not all about the money. And if it is about the money, then I need to know that and just pay more money, right? You know what I mean? So now I drive by this building all the time and I see it and I see this other company that bought it and I'm like, ugh, you know what I mean? So that's one mistake. And I think that when that happened, I should have just really given it more thought and more time as assuming, and they say ass makes an asshole out of or whatever, right? Assuming makes an asshole out of everyone. And that's exactly what happened to me. And I felt like, okay, that was mine. I put 5 years in of time with this guy and I thought he'd give it to me at a number that he felt was fair, but he just beat me out. Now, I should have maybe known that I would have thought he would give me that offer back of a number to beat it, but he didn't want to play that game. He said, this is the number you gave me. I got a number the next day. I'm going to go with that. And I didn't want to fight it. I just said, I respect that decision and, move on with that, right? So that's one. You grow from just an interpersonal relationship. Other mistakes that I've made is the problem is that you don't know what the future is like, right? And this is what holds us back. And valuations between what the future is like and valuations holds us back in our decision making sometimes. Diving in, like when we first met, I could have bought more, but I didn't. And that's a story probably that goes around. Everybody talks about it. But I think that if you're in the space, you're in the zone, and you're specialized in that niche, try to grab everything around you. I think that's what I should have done more so. And I should have networked. And I was definitely lone wolf. I mean, I was lone wolf up until maybe 2 years ago before I met you guys, right? Yeah. I was all by myself. I was limited partners. I didn't even want to partner with people because I felt like I didn't want to grow. I just got this as a pension. So I'm like, pension, that just means me, selfishly, right? Yep. It doesn't mean me and 10 other guys. It's just me, right? And if the bank is willing to give me the money, then why isn't it about me, right? So it was more about me for the real estate aspect of things. I think that's one that it's not about me. It's about us, and it's about the person on the other side as well, right? So it's about what that person cares about, So I think that's a couple examples.
Yeah, I think for a lot of real estate investors, especially when you first are new to the game, they really do. They focus on having 100% of that grape rather than a small piece of the watermelon, right? Yeah. And again, it's a mistake I see investors make time and time again. And even as I grow as an individual, I can think that I've overcame that obstacle or that limiting belief, but then something different will come my way, right? And all of a sudden you're like, oh, well, I was cool sharing a duplex, but now that it's real stakes, well, this is different. But I don't think it really is. I think that in fact, it's always coming at life with an abundance mentality is just so key, because like we were saying before we even got on this video, if we start with that self-doubt of there's not enough deals or it's scarcity oriented, people aren't going to want to even hear my story on YouTube or whatever, we start setting ourselves up for that to become our reality.
Yes. And difficulty too, right? I mean, I think what actually kind of helped me push me to some of these other deals that I've got into is knowing that actually what is the easiest. So, as we were talking about, I always have 5 businesses, and out of them, what is the easiest one to make money? If money is what your goal is, what is the easiest one to make money, right? So you compare the deal you're looking at over here on a real estate perspective and compare that to a business that you have, I'm going to invest $200,000 in this 20-unit building, or am I going to invest $200,000 in this company where I have 10 employees and my growth is higher, right? So I think that you have to also look at where you're at. Where can your money be deployed where you feel like it's the safest or most profitable, or you want the building, or it's just the right time in your life. So I don't think there's a blank slate for everybody to follow these set of rules, but I do think they have to do it. That's the first step, right? Always have to do it, and you have to get, and you guys are big pushers of this, you have to network and talk to more people, because the more people you talk to, at least you know if you're on the right track, right? They just basically just put a stamp of approval on what you're doing, right? That's important. Well, we didn't have that. We were going on our own 100%. Stamp. We were going to look at the money side of things and say, okay, this is working, it's doing it, the bank's willing to give me money, let's roll this coaster as long as I can, So that's it. So there's so many varying degrees on this game, right? That you can look at it from all angles and figure out what's right or wrong. The good thing about it is that we have information, which we didn't have before, right? You guys are lucky. Lucky. Do they know they're lucky?
Yeah, I tell them all the time that the information asymmetry that used to exist as a real estate investor, you go back even 5-10 years ago, Canadian real estate investor content, there was 1 or 2 books that were 10, 20 years old.
Here outside this duplex, great deal, you guys should buy it. click, and flip,
Yeah.
you know?
And that was pretty much the extent of the sort of information we could find online.
Or the books.
Yeah.
The books, the grocery store, right? That's all we had. I know. It's crazy the way the world's come to.
Yeah.
You know? But
And so kind of talking about biggest mistakes, another mistake I really made at the start, and I think it's a mistake a lot of real estate investors encounter, is thinking that debt is the enemy.
Yeah.
So like for me at the start, my plan was I'm going to buy a house a year for 20 years.
Yeah.
After 20 years, that first one will be paid off. Then I'll pay off all the other houses.
Yeah.
Bada bing, I've got 20 paid off houses. I'm rich now,
Yeah.
so on and so forth. And what I've noticed as I've networked and met more real estate investors, the ones that really grow a massive empire, the ones that really grow something substantial, they got very comfortable with debt.
Yeah.
They're the guys with two or a second or a third mortgage on their principal residence, you know, like they're constantly stretching their limits of what they think is possible and stretching the limits of the capital they have to really, you know, do more deals, make more offers, all that stuff.
Yeah. I mean, the only asterisk to that point is you have to be in the game and you have to have a structure in your space. This isn't a store where you just go buy everything because you got a little bit of money, I'm buying it, and now that I got it, I'm rich and I'm going to go retire. Like, that's not the game, right? You have to kind of go through the process and have a structure and setup done, and then then debt is very good. You can't just buy these things without any thought process. So that's the first step, right? So I think that without debt, you'll never be rich. I mean, I would say wealthy or dollar-wise, right? Financially wealthy. Because you need the debt. There's just no way that you can put $15,000 and get $1,000 a month for life. There's just no way. And real estate is that way.
Yeah.
Right? It is that way to get debt. But it's funny, speaking of debt, I get these calls now from companies selling. The world has become so creative where I get calls now for business loans, and to this cell phone they're calling and they say, would you know, we have business loans and we know you to grow your business, we'll give you business loans for debt. So debt is far and wide now, where you can get debt on anything, you know, so you can grow different businesses. Real estate's one of them for sure, but there's lots of business you can grow debt. But before it was unheard of. It was like, I'm signing my life away with $200,000, and it's like, wow, you crazy, buddy, selling $200,000 by signing his life away. And now it's $2 million, but you know that $2 million will make you $4 million in 10 years.
Cashflow Tribe.
Hey YouTube, have you checked out Cashflow Tribe yet? It doesn't matter whether you're an experienced, seasoned investor or brand new to the game. I can probably predict if you're currently not having the level of success you want as a real estate investor, it's due to one thing. That one thing is you're not making enough offers, plain and simple. You need to be making more offers as a real estate investor if you want to hit those big, audacious goals that you're setting for yourself. So here's the deal. Cashflow Tribe, that's the community that myself and Ben were making together. And so Ben's actually so busy trying to provide value to you guys that he had to take off there. But here's the deal. Cashflow Tribe is really a one-of-a-kind community focused on results. That's the difference between us and everyone else. We want to get you guys those results. I'm tired of seeing people commenting on my YouTube channel for 2-3 years now, but they're not making offers. What's holding you back? I'm going to guess that it's either a lack of confidence or a lack of competence. And we cover both of those things in Cashflow Tribe. So here's what I'm going to do. I'm going to make you guys a 7-day free trial offer. You can join Cashflow Tribe completely free, get to test it out. If you like it, great, stay and pay. If you don't, well, I hope you at least find one great idea that you can take away and use to start making more offers, gain more deals, and finally start making the money related to real estate investing that's probably why you're watching my YouTube channel. So let's do this, guys. Let's make 2020 your year.
Cashflow Tribe.
Debt is far and wide now, where you can get debt on anything, you know, so you can grow different businesses. Real estate's one of them for sure, but there's lots of business you can grow debt. But before it was unheard of. It was like, I'm signing my life away with $200,000, and it's like, wow, you crazy, buddy, selling $200,000 by signing his life away. Now it's $2 million, but you know that $2 million will make you $4 million in 10 years. That's the difference. And you could never make that $4 million without the $2 million. So you have to take on some sort of debt, but as long as people have structure. And information, they have the information, they just need the structure, right? And getting off your butt and doing it.
Yeah.
Right? That's the most important.
Absolutely. Taking action is something I see so many investors struggle with. And in particular, I think the reason a lot of beginner investors, they struggle, they make the mistake of wanting the perfect deal. So they watch a handful of YouTube videos, maybe they hear me or another investor talk about, say, the perfect BRRRR, where you're able to like buy a property, renovate it, get all your money out, and it still cash flows perfectly. Maybe you even get more than the money you put into it out, and you do it in like 6 weeks or 6 months. And so they see that and they immediately want to do exactly that deal for their first deal. And what ends up happening is there's not a single deal on the MLS or realtor.ca that fits that perfect avatar. And so one thing I've really started thinking about a lot recently is we need to like get comfortable with a small margin of failure. 100%. So like rather than focusing on that deal that's 100% guaranteed, we need to like be okay with deals that are 99.8% guaranteed, because everyone would do a 100% guaranteed deal.
Yeah, I mean, the example is about, this is going back 13 or 14 years ago, I bought a property in St. Thomas. So St. Thomas is a small town about 25 minutes outside of London here, and I couldn't get financing. So this is a weird space you get into. It was a bank repo, and I bought the building for $130,000. I put about $100,000 to renovate, so it's a commercial unit on the bottom, that's 3,000 square feet, and 3 units above. So it's on the second level, or first real level, it's a 2-bedroom, and then above it is 2 1-bedrooms. So converted the whole space, made it really nice and pretty and all that fun stuff. So we had, after it's all said and done, we had about $250,000 in the space, $230,000 or so. Now I was trying to get my money back, trying to refinance it. I went to every bank, talked to every mortgage broker I could talk to, and nobody would finance it. And it's because it's zoned commercial or deemed commercial in their mind, but it's too small of a number. So we wanted to get out $300,000, so we got it appraised at $300,000. Spent $2,500 to get it appraised at $300,000, and I could not get money out. I checked for 3 years, and as a growing experience, and in those 3 years, if you talk to me about real estate, I probably wasn't as interested as I am the following, the following 3 years, because that really put the handbrakes to it.
Yeah.
So there will be people that will be watching these videos and realize, I just bought this thing, it's not been good, it hasn't worked out, and it's like hard to get my money out, and it's stressful, right? I mean, we had $250,000 of our money that's half borrowed against this place, on lines of credit and all this stuff. So you're just trying to make ends meet to try to pay this off, and it's just not working out. So it just, push come to shove, the environment changed a little bit, and I got CIBC to write a private loan. Like, not really a private loan, but I didn't know this, and I don't know if they still exist today, but banks actually have, each bank itself has a line they can mortgage against a person. So it used to be you have to go through an underwriter in Toronto and all that stuff, but they have products that they will sell as like, it's kind of like a business line, but it's against a property. But it's at prime. So I still have this mortgage on it, and I owe like $50,000 now, $54,000. I just looked at it yesterday. But that product didn't exist. So it's like, how did I not know this product exists? Because I was never in that position to know. And then as I kept trying to hustle to get somebody, because I'd only believe like everybody else, mortgage brokers and the bank route, right? But if you walked into a branch, which is the last place I would walk into for a mortgage, we all know that, but that bank helped me out. So it's in St. Thomas, the CIBC in St. Thomas. They wrote the deal as the building is collateral on prime, and they gave me a 10-year deal. So yeah, it's not 25 or 30 years, it's a 10-year deal. But I got money out of it. That's the key. And the place just barely cash flows at the numbers it works, but that's an experience where in those 3 years, I felt like that was a mistake. I shouldn't have bought it, because that held me back to all the properties I could have bought with that money. At 200, basically at 200 grand or so that I had in it. I mean, I could have deployed that in like 5 other properties, right? So that was a slowdown, but I didn't stop there. I just realized, oh, okay, well, there's still time on our hands, we just continue. So as long as you have time on your hands, that's your safety net, I think. You know, that's the biggest thing, where you can make mistakes, and you can make those, but they're not even really mistakes, they're just diversions, really. Because you're still back on the road, right? You divert, you go back on the road, it might take you a little bit longer, and we all get diversions. You get it every day driving on any highway, right? You get diverted, right? So you just, as long as you know you're going from here to Toronto, or from Toronto to London, or from Toronto to Montreal, it doesn't make a difference how many diversions you get, as long as you get to Montreal and Toronto. To me, it really is about time in the market, not trying to time the market. And that's another mistake I think a lot of real estate investors make today. The market is a lot more expensive in southwestern Ontario than it was 5-10 years ago, but you can still actually find cash flowing rental properties. Because the rents have shot up. Right? Rents have shot up, and there's still so many undervalued markets, and there's also people that, again, pass away and new babies are born, right? So as long as that cycle continues, it's just a time. It's just a time that's a shift to your favor. So it is a long-term game. And people will know that. And society has built us as short-term thinkers.
Yes.
So if we can shift that thought process of short-term thinking to long-term thinking and not trying to make money today, the money will be there. And there's lots of avenues in this world that you can make money today. But real estate is a long-term game because the building has been there longer than we've been alive and will probably be there for generations to come.
Yeah.
I mean, in Europe, buildings last 1,600 years, right? So it's not going anywhere. It's going to stay at obviously the values will go up and down, but you're really borrowing 3/4 of the money anyways.
Yeah.
So what's the difference, right? If you don't use your credit, it's gone, right?
Yeah.
You got to use your credit, right? Or if you don't use your credit, then it's like your credit and I'm me. I can only go so far. I need you to help me get to where I got to go, right? So, yeah, it's a crazy world we live out there, that's for sure. I love it.
Yeah. So I hope this helped you guys kind of understand some of the different problems or mistakes you may encounter along your real estate investing journey. And it's really important that we always look at them with perspective. Often it's really easy to make a mountain out of that little molehill and really overanalyze or overcomplicate the situation. It's something I see all the time from beginner or novice real estate investors is they get fixated on this one thing. Okay, if I could figure out the perfect corporate structure, or if I can figure out the perfect tax plan, then I'll go do a deal. I think far too often, I guess, actually, let's take a step back. I was going to say that wrong. Far too often, people hold themselves back by not taking action. The number one piece of advice I could give any new real estate investor is find a deal, make sure it's 99% safe, or that you've got multiple exit strategies on that deal, and then pull the trigger. It's really important that we view these mistakes or these problems that we encounter not as mistakes or problems, but they're really just our tuition to the school of hard knocks as a real estate investor. Everyone's very comfortable dropping or losing $40,000 to $100,000 on an education if it comes with a diploma or a degree, but all of a sudden when we flip it and it's now a real estate investment, all of a sudden that's a personal failure as a human being. That's completely wrong, guys. We need to really de-emphasize our ego into our real estate investing.
Yeah, like I think to add to that point, the truth is that you get experience not from just buying it. You get experience in running it, in all the problems that come with it, all the people you meet around that little ecosystem that you've built or you've bought. And as you add more properties to it, and as long as it pays the bills in cash, it doesn't stress you the F out, then you're safe and you can keep buying these things, build the people around you, whether all your contractors, the banking, understanding how business works, meeting people that are smarter than you, meeting people that you can teach. So it's just not like, yeah, I bought a property, I'm making lots of money, I have a retirement plan. It's all the things that encompass that. And you can really get the taste of business sense by buying a real estate property. And you don't even have to be a businessman. Right? You don't have to open up a company and hire employees and do all this stuff. You can tinker with that in real estate, and it's so forgiving because it's not like you're buying one house and you have to get all that rent. Usually rentals have 2, 3, 4, 5, 10 properties that you're diversified. If 2 or 3 leave, it's okay. It's still paying the bills. You're still learning something. So there's always a cost in life to learn something, and I think that's the biggest takeaway, right? So
I love it.
So yeah, well, here we are. We got lots to say, but only so much time.
Perfect. Thanks, guys.
Thanks, guys, for watching.
Thanks again to Mike for taking the time to sit down with me and just discuss some of his biggest mistakes. Oftentimes on YouTube, people just want to share the great, the best, the I crushed it stories, the hashtag winning, but I think it's important that we show both sides of the equation and really demystify what can go wrong as a real estate investor. If you guys are enjoying this series of videos, what I need from you is for you to jump in the comment section, show us some love, give us some feedback, as well as smashing that like button, hit the subscribe button if you're new to my channel. If you guys want to see more Mike Van Houdt, check out this playlist right here, or if you just want more great Canadian real estate content, check out this playlist right here. And until next time, remember, making money is a team sport. There's more than enough money in this world for us to all make it, but if you're not saving it, I mean, like, what's the point?